Here. I've had two independent questions today on whether you should buying gold hedged or Ivv hedged. So two independent questions warrant a video. Because to date I don't think people have really, well, I could be wrong, but I think people who have bought gold and people who have bought Ivv or VGS or NDQ haven't really taken into consideration the currency risk, and now I could be wrong. so I'll just go through like the basics, and sorry if that bores you, but just to make sure I cover it all off. So this is the Aussie US dollar. So let's say back here in 2013, you went and bought something over in America for $100. Okay, so the exchange rate was 1 for 1. So it cost you 100 Aussie to go and buy something for $100 US. Okay, so let's just say now that $100 in US, let's just say it's stayed as a US dollar note. $100 US dollar note, and now you want to bring that $100 US dollar note back, and the exchange rate's now 65 cents. So it now costs more money to buy that note in America, and so when you bring that money back, you'd actually get $1.50 $1.50 in Aussie dollars back. Just doing nothing but buying $100 note that didn't even. I'm going to forget about inflation and all that stuff, but you've made money just by holding it in US dollars and not in Aussie dollars. So everyone who's bought the IVVs and gold unhedged, you've had an extra kick, this currency kick. But I think my statement, Donald Trump's thank you message to me saying, Rudy, I'm trying to get the dollar down so the gold price will go up. I don't know, maybe got people thinking, because obviously gold in US dollars, if the US dollar goes down, the US dollar gold price goes up. So anyway, so it all comes down to trying to, because currency is a really hard thing to do, because who knows why. I mean, they say interest rates and deficits, and they're all. I mean, the US dollar is the king, but it's probably the king of all the crap. Because me being gold as a true money believer, all currencies are just nonsense, really, but it's the world we live in. Okay, so if we look at the so this is the US dollar index. So this is made up of a basket of currencies, of which the Aussie dollar doesn't. It's mainly the euro and the Japanese. We're probably nothing of it, but obviously it influenced the Aussie US dollar because it is the US dollar, and the US dollar is on. Trump does want to get it lower because then it's cheaper for people to buy stuff from America. And these are monthly charts we're looking at, so you can see here we're right on a if that breaks, that'll make or anything, or commodities basically, because they're all priced in US dollars, start rallying, apart from supply demand issues. Now if we overlay the US dollar, so this is okay, so the bars are the Aussie US and the purple's the DXY. So you can see it's inversely correlated, as you would think. You know, DXY up, Aussie dollar down. But the Aussie dollar's been quite strong. Like you can see lately, the dollar's been coming down. So this, technically that means like that flat line there, or you know, the flat lows is these flat highs. So technically it feels like a true relationship. Our Aussie dollar should be higher, but it's not. And so that's interesting. But as I said, that's because the DXY is mainly the euro and the Japanese yen. They're the big guts of it. Now, if we look at this is a weekly chart. As I was saying before, this is a bearish chart pattern, a rising channel. So that's why it confuses me at the moment, because, well, it hasn't broken, so it hasn't confirmed it's bearish. And this doesn't mean it's going to fall over just because it's a rising channel. It can pop up. So if we look at, okay, so let's look at IVV. So IVV up, IHVV up. All right, well, what's the difference? Okay, so this is IHVV over IVV. Okay, we'll just come back to a monthly. So just to try and make it simple, so this March 21, so this high here correlates with the high in the Aussie US dollar. This is the Aussie US dollar here. Okay, so coming back. So basically, if you invested in IHVV at this time, you would have lost out because IVV outperformed. You can see. So as the Aussie dollar goes down, you get more for your IVV, like that $100 example. Now, if you invested here, April 20, you bought April 20 and then sold March 21, you would have killed it on the ratio, because that was the Aussie dollar going up. So you come and look at this thing, and hence, you know, if someone's deliberately made a decision to go into unhedged IVV, then very well done, because you read the currency market. But I don't know how many people actually did. But anyway, that's life. And you can see, so since the beginning of the year, January 25, the hedged version has outperformed the unhedged version. And that's because the Aussie dollar has gone up. So what do you do then? Someone asked me this one before, and I just say go 50-50. Because as the dollar looks, you know, it hasn't. So again, here the dollar hasn't fallen over yet. So there's all chance, because a lot of people are short the dollar, that this could bounce, and so if that bounces and then this breaks, then that confirms the Aussie dollar US is going down, and you want to be in IVV. I know I'm not giving you the answer. That's because currencies are hard to play, especially at this stage, because we do trade in a range. You can see this has been a floor since, what's that, 2008. So we're at really low levels. So that would, you know, technically you could say this is fully all bearish. I know I'm rambling. That's because it's hard. So the takeaway is, if you really want to care about currencies, is to go half-half until. But even if this is bearish, it doesn't have far to fall. You know, 64 to 61. So I'm not going to tell you what to do. Actually, I'm just going to leave what I've said as it, and hopefully that just confuses you more. No, I'm not. All right. Thanks for listening, and great questions, because I think most people don't think about it, but it's potentially time to think about it. All right. So yeah.